Yeah, I'm not sure. I don't predict prices very good, obviously, but we're price takers, not price makers. I think you just have to remember where we've come from. We came off of a very large oversupply coming out of the COVID thing, and basically to a fundamental undersupply that we have right now, and it's all man-made. It's all due to federal lands, permitting ban, and leasing ban, and also punitive legislation and policy that the administration is trying to put through. So it's all man-made. It doesn't have to be. Prices are up 45% on gasoline and 35% on heat and oil and things like that. So the consumers is feeling it. And that, like I say, it doesn't have to be. It's all man-made. You know, it's all due to the policy of this administration. So, you know, I'd say to Joe, President, come on, man, fix your energy plan. That's all you have to do.
It's a fair shot, I guess. So let's go more specific here and get a little more into the details of this. I mean, we were creating what, 11 million barrels a day of oil recently. Has that been changed? No, we're still there, and you know we're just 1.5 million barrels shy of where we were at a high. So. I mean, you know, we gave this something. Is that because of federal regulation, or is that because demand is not what it was? Or why would that be? Why would it be less? No, demand is back, and that's the issue. Demand came back, and we're right back where we were practically pre-COVID. So, yeah, federal regulations, you know, that's holding it back. Also, access to capital and everything else that you get when the administration comes against you. So, you know, that's the issue that we have here. So,
but Harold, if I can just ask you about that point, it's not just policy here. Investors have been burned by shale and by energy for the past decade. Even under the Trump years, that was true. I mean, look at the market cap of Exxon. It's only $250 billion right now with an $80 oil price. It's telling you that investors don't have the appetite for these sustained losses.
Well, that's not quite true. They weren't burned for decades, that's for sure. As shale was being developed, you know, there was some capital that was put in without a good return, certainly when everybody was trying to hold the leases they had. So there's reason for that. So it wasn't decades. Let's get that right. So. But today we're seeing cash flow that's being generated by companies, and the investor interest should be there. You know, it's coming back slowly, and we just have to earn that credibility back. So, you know, this whole thing doesn't have to be. We are at a critical point right now, and you know, all you have to do is change some policy, and people can go back to work in this industry. So. We're thinking about American consumers first, and you know, it doesn't have to be this way. Normally, these transitions are driven by affordable, efficient fuels transition, but that's not what this administration is trying to do. They're trying to make this all about getting rid of all fossil fuels.